Apple down 5.18% today. Microsoft down 3.32%. Arc Innovation down 10.10%. This market crash just hit a critical level with full-on capitulation, full-on quitting, and full-on margin calls across the board. Ladies and gentlemen, we need to talk about what in the hell is happening. What's going to happen next? We are really in a tricky spot right now. If we do not see a bounce soon, this could develop into an even worse situation. Now, I will say, we have seen a lot of discounting in the market. We've seen a lot of pain across the board. And a lot of people have already quit or have gotten liquidated. If you had a lot of margin outstanding, I mean, you don't now. You've been forced to get out of that margin debt. So we have a lot to talk about. There's a lot of moving parts here. We had Fed Bullard that did just speak, and he said some really weird things that we should go over. We have some data coming out tomorrow. We just got a lot to talk about. So let's dive into it. If you guys have any comments, questions, or concerns, feel free to source that information. Ask a question down below in the comment section. If it does not get answered and you want a direct, real-time response to your question, come join us on the live stream tonight in between 10 and 11 p.m. Eastern Standard Time. We will be live, and I don't even know what to say about this anymore. It's gotten so bad that it's just like, what do you even say anymore? Like, what do you even say? So many stocks that I personally own were down over 15% today. DraftKings down 10, Square down like 16, Affirm down almost 20, Fubo down almost 20. It's into AMC down like 16. It's getting pretty wild. And if you look at the S&P, it is extremely bearish, considerably more bearish than we have been all throughout 2022. Obviously, we're like a falling knife at this point, just straight into the ground. Now, you'll see that usually when you fall this hard, this fast, you tend to see quick bounces. That's what you've seen in 2018 in the beginning, end of 2018, what you've seen in 2020, and likely what you'll see now. But I will say the Fed is not your friend right now, and they're essentially trying to do this to the stock market. Like, there's been no secret that they've been trying to do this. But the difference here is that the Fed is not likely to come in and actually U-turn completely on policies. But what is important to know is, yet the Fed wanted this. I don't think they wanted this fast. Does that make sense? The NASDAQ year to date is down 28.22%. I think they wanted this kind of drop, but not in the first 5 months. I don't think they wanted the worst stock market since 1939. I don't think that's what they had in mind. So the Fed comments here can be very important. If the Fed does, start to talk like maybe they've done enough and maybe they should just hold off for a little while, that's potentially what I could see giving us a bounce. But other than that, there's really nothing. Like, we haven't had a bit of good news, like a bit of real positive news in a very, very long time. It's been months since we have had something positive. Bad GDP, bad inflation, bad unemployment data, bad Fed, bad earnings for the most part, like not great earnings, pretty bad across the board. Nothing has been good. So there really has not been a huge reason for the markets to bounce. And now you add, all of these margin calls into the situation. And that's where you can get these full-on risk-off moments where the ARC ETF drops 10% in a day. Like that ETF is down like 70% from its peak. Margin debt still sitting at about $800 billion. I imagine the data for April is going to come in much lower, maybe $650 billion, if not possibly $600 billion for margin. But considering where we were during the crash of 2020 at the lows in March, we were sitting at $479 billion of margin debt. So there is still a substantial amount of margin debt now comparatively to 2 years ago, which is, I guess, call it not such a great thing. If you look at the heat map, just anything tech or consumer cyclical got absolutely destroyed today. Like, tech just got destroyed. Nvidia down 5.5, Apple 5.2. Those are some of the biggest decliners there. Facebook down almost 5. Not good. Even banks got destroyed as well. Not good across the board. But what is the Fed saying? So Fed Bullard says Fed has teed up 50 base point hikes for future meetings, basically saying that they're probably going to do 50 base point rate hikes. And then it says Bullard repeats he favors getting rates to 3.5% by end of the year. At this point, it just looks like they want to see how much destruction they can do to the stock market, which is not good to hear. And then Bullard says some of April's inflation is transitory, but big chunk is likely to persist and requires policy. I believe that's all. Right here, Bullard from the Fed does not think there is a high recession risk for the U.S. right now. And I mean, they don't have to think anything. The markets are doing the thinking for the Fed. The markets do not believe the Fed. The markets are fully expecting inflation to last a very long time, and they are expecting a very deep recession at this point. Stocks have been discounted more than I even expected. I thought a bad 2022 was on the table and likely to play out, but 28% by May, that's not exactly what I was thinking. Now, if it continues to just head straight down, then you're going to start to trigger more stop losses, and you're going to start to trigger more margin calls that start to come. So it's like a self-fulfilling prophecy until we get some good news. Now, tomorrow we do have data that does come out, and the most important data point is obviously going to be PPI month over month. That's expected to drop quite dramatically. From about 1.4% month over month down to about 0.5% month over month. So if that is really good, you could see some people bullish about that, but it's not as important as CPI. CPI is much more important in terms of, you know, what the Fed actually looks at, core CPI specifically month over month, and that came out very, very bad today, which we'll talk about in just one second. But PPI could be bullish, and I don't think, to be honest with you guys, I don't think we need to see like some groundbreaking bullish catalyst to see a substantial bounce, considering we have fallen so much. And then you do have initial jobless claims tomorrow as well. If labor markets are still really, really hot, that's obviously not going to be a good thing for the stock market. So potentially could see some bullish catalyst for tomorrow. It doesn't necessarily look like it though. Now for inflation, it says inflation barreled ahead at 8.3% in April from a year ago, remaining near 40-year highs. Core CPI, which excludes food and energy, was also higher than expected, rising 6.2%. Shelter cost, which comprise about 1/3 of the CPI, rose at their fastest pace since 1991. Inflation adjusted earnings continued to decline for workers, falling 2.6% over the past year due to the surging cost of living. Now, the fact that people are making more money, sure, is good, but with inflation this high, they're still losing money. And the tighter the labor market stays for, you know, an even longer extended period of time, the more these companies have to pay out to acquire those workers, right? You can't really offer, you know, $14, $15 an hour now when you could go somewhere else and they could pay you a little bit more and then a little bit more, right? So there's a lot of competition, and it really makes the cost of labor become very, very expensive. And I think that's why tomorrow's initial jobless claims could be pretty important, and PPI as well, producer price index. That's the producer side of inflation. Surprisingly, to some, if this does start to go down, the producer price index, and it's not as expensive to actually produce goods, then potentially these companies won't have to pass on as many costs to the end consumer. Think about it. If you have to pay people at McDonald's, I used this analogy in the last video, $15 an hour, you're really not going to have a dollar menu anymore, right? Because you have to compensate that one form or the other. Or for a closer example, comparatively to PPI, if your bread costs start to go down, then maybe you don't have to raise prices as aggressively. And that's what could be a bullish thing tomorrow. Now, I'm not really expecting it to, just because CPI was pretty bad, but it could be the case. Now, back to the economic data, you can see there is some Fed speakers tomorrow as well. FOMC member Daly speaks, and it could be one of these members that speaks that could trigger a bullish rally. If they do start to kind of lean more towards the dovish side, that could obviously be very, very good for the markets. I'm not really expecting it right now, but I think certainly if the markets were to fall in another 5 to 10%, you're going to see the Fed step in and try to slow this thing down. Not meaning, you know, it's over, but at least slow it down, because when the stock market takes hits like this, you start to get a lot of uncertainty in the markets, in the economy, and that does feed into slower economic activity, and that is obviously not good for the Fed, right? They need slower economic activity. But the thing with the stock market is, you know, if the stock market drops, we're already down almost 30% on the NASDAQ in 5 months. If that thing drops 40%, you know, you're going to get a lot less business investment. You're going to slow down the economy. The Fed kind of wants that. But by the time you realize the economy is slowing down, you've already lost a lot of faith with investors, right? If you were going to build that new restaurant, if you were going to start that new company, you might have to wait a little bit longer because financial conditions have tightened so much. In paper values, paper net worths have fallen so much, especially in a lot of these stocks that have very promising futures, but just there's a lack of buyers for anything right now. So we'll keep that in mind. It looks like the move here in after hours is positive, just slightly up about 0.23% on the S&P 500. Futures were really green last night, up like 1% on the NASDAQ. CPI came out and everything went to shit. You seen a bounce, you know, in the beginning of trading, and then everything by the end of the day started to falter again. So this market is going to be a lot of back and forths, and this is the third straight day of hitting new yearly lows. So no bueno, not a good trend that is going on. You could see, just draw a trend line here, like simple, you know, technicals 101 is pretty much straight down. So we want to hope for a bounce. We want to see a bounce, but we need some kind of good news to get a bounce. If I am missing something, potentially a data point that comes out that could be good, or just anything in general you think could cause this market to bounce, come join us on the live stream. Source your information, source your questions, your facts, whatever you really want to talk about, because maybe I'm missing something, but it doesn't really look like we have anything for scheduled you know, events or data that could be super bullish, besides if PPI is bullish tomorrow. If it's not, then this could be a long road to the downside. But I think it's pretty appropriate to point this out, that the most millionaires in history were actually created during the Great Depression, and every other down cycle creates more millionaires than essentially millionaires that lose their millionaire status due to that. So what does that mean? Right now is the time to essentially be buying stocks in companies you like for the long term. It's not guaranteed to make you money tomorrow, but over the long term, it should do very well. The price at which investors are willing to pay for stocks has dramatically went down. It's called multiple compression, and that's why you've seen a lot of downside pressure on especially a lot of stocks that are not actually turning a profit yet. But one day when the Fed switches, when inflation comes down, really those two things, you could see, and you will see, a lot of these stocks rebound quite dramatically. Not all of them will hit new to all-time highs ever, but if they are quality companies, they will eventually be fine and make you a lot of money, and hopefully put you into that group of people that turned a severe downside into potentially millions of dollars. Now let's go over the data behind AMC and everything you guys need to know, because it was absolutely wild. And before we do that, I will just say one more thing. Apple did finally see its flush out. It fell 5%. This was the worst day for Apple stock since October of 2020. So the worst day of 2022 and the worst day of 2021 today. So you finally seen that washout. You needed to see that in order to actually see a market bounce that can actually hold some legs. And the fact that Apple fell 5% and the S&P only fell 1.65% is a glimmer of light at the end of the tunnel. When Apple does bounce and everything else does bounce, then you could see substantial moves in a lot of different equities, right? In the overall benchmarks, it would look very, very well. Like at one point today, if Apple had reversed and like up here when Apple was still down 1%, if Apple could have came up and maybe, you know, gained a 0.5% or 1%, we could have seen a 2 or 3% positive day. After all, at one point we were up over 1% on the broad indexes, but that did not happen. Apple continued to give it up, and that caused the whole entire stock market to head down quite dramatically as well. We are up 0.33% here in after hours, so we'll see where that takes us. Now, as far as AMC stock is concerned, we did break under $10 per share at one point. We hit $9.92 per share, and then we did actually start to rally into the close of the day, kind of inversing what the overall markets did. You could see the markets were pretty much selling off into the close, and then AMC stock did actually rally into the close. So you obviously found a lot of support, a lot of demand at $10 per share, and AMC does have a business behind it. So it's not like this stock is going to go to zero. And I think people forget that. Like, in my personal opinion, a lot of the downside, I won't say all of the downside, but a lot or most of the downside is probably already here for stocks like AMC, for a lot of stocks that actually, you know, provide a service or a product that actually has real revenue or sales. A lot of that downside is probably already felt or close to being done. Right, so I would watch $10 per share. That's going to be a key level. Pretty much we've fallen off the board. We just had earnings, which were actually very, very well. And as you guys do know, I like to point this out a lot. AMC stock tends to fall after earnings, but it actually tends to go through major rallies about 2 to 4 weeks after earnings. So if we do see a market bounce here in the next 2 to 4 weeks, would not surprise me to see AMC go for another rally. Definitely not out of the picture yet. And I'm going to make another video later on today talking about why this is, you know, bullish for the MOAS. And I think that's very important for you guys to know. And stay tuned for that one, because I think that will provide a lot of perspective for everybody out there. Maybe people that are concerned about AMC, you definitely want to stay tuned for that video. Now let's go over the Ortex data for AMC. And we can see the put to call ratio is now at 1.6, so it's even getting worse, and there's now even more calls or more puts than there was just a couple of days ago on the S&P 500. So definitely if you do get any slightness, you know, reaction to some kind of bullish news, I don't even know what to call it anymore, then you could see a big market reaction. But AMC short interest of free float is sitting at almost 21% at 20.86%. Current shares that are sold short of 107.51 million. Cost bar max at about 3%. Utilization at 100%, and days cover sitting at 2.84. So the situation here looking very much primed to see some level of rally as soon as market conditions will actually let that happen. Borrowed shares for the day at 9 million. Return shares at 3.41 million. So a lot of shorting activity today, and this is only what is accounted for. The puts don't even get accounted for in terms of the short interest number, which you have seen a lot of puts come onto the option chain. In the past week, you have seen 153 orders totaling $65.71 million. Positive order value of 41%. So overwhelmingly, the vast majority of dollars that are heading into AMC's options as far as institutional investors have been extremely bearish. Even for today, positive order value of 41%, 32 orders totaling $15.99 million. So very bearish across the board, and that is helping and basically forcing market makers to go out and short AMC on the overall markets to oblige for those put options that obviously are running into the money. So that is that. AMC on a technical basis, even the S&P on a technical basis, it's all extremely oversold. The MACD is extremely bearish, and it has not been positive since really about April 5th, so well over 1 month now, which when you get that kind of extreme pessimism, you do tend to see rallies off of that. Like that's not fictional. That tends to happen. When everybody thinks something's going to happen, it usually doesn't happen that way, and you usually see an adverse reaction to the popular opinion, right? Now, watch that $10 level. Found a lot of support, like I said earlier, around there, even when the markets did, start to sell off into the end of the day. As soon as you hit 992, the stock did almost immediately go back above $10 per share. So that is a very strong sign. Watch the $10 level. I really don't expect to break that, but it's possible. Now, if we do get a big market bounce, then I would firmly expect a move back above $13 per share, as that was our previous level of support by a lot. Like, we held a lot of support around 13 back here in early March before the last Fed meeting, and obviously the last 200% rally actually happened. Lots of support there, and we seen a lot of support even around 15 this last time around. We flirted with 15 about 1, 2, 3, 4, 5, 6, 7, 8 days before we actually did close under 15, going under 15 for 1, 2, 3, 4, 5 days intraday, and then going back up above 15 by the end of the day to not close under 15. So long story short, you want to watch those key support levels: $10 per share, $13 per share, and $15 per share, to see where we do get during the next bounce. If it's going to be big, if we're going to break above certain key levels, that's going to be very, very bullish. But nonetheless, stay tuned for the video later on today. That's going to be very, very important, because I want everyone to know the context of why this is actually bullish, in my opinion, for the MOAS. Hit the like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. Come join us on the live stream, and if you guys want to trade with us live in real time, link down below in the pinned comment. Thank you for watching, and I will see you in the next one.